The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host.
The following takes place between 2 p.m. and 3 p.m.
So we got the S&P up 15.5, Dow's up 120, Nasdaq's up 72, Russell's up 3. Again, kind of the weakest of the bunch out here. And again, a little bit more rotation out of those stocks that had run so hard. And a little thought that now that these things are up, will they be the weakest in the next 6 months or longer after a trade deal? Of course, no trade deal yet. My guess is that you won't see a trade deal either until after the election. Chinese are not going to give anybody a win on that one. What else do we have going on out here? Of course, seems like the market is pretty good. It's got blinders on. Doesn't matter what happening politically or anything else. As long as the economic news is good, we got people more piling back into it. Would have liked to seen the volume a little bit better today so far. We got 3.6 billion shares, which is kind of like August, late August and September. We've had some good volume. This isn't one of the days. I don't know exactly why it is. Of course, Friday, normally we have a little lighter volume, but we got that. Of course, Monday and Tuesday, we get right into fund buying, and Wednesday, the way this is set up, I'm not expecting a whole lot of buying tomorrow, but I can imagine some markup. Going into that fund buying, of course, a rather, I'm going to say, severely unjustified upgrade on Apple did exactly what happens to the most of the time for people that pile into stocks that have massive short sales in them, and that is they'll drum up some bogus upgrade. And of course, the weakest hands are always those of the shorts. They are 10 times more likely to make a daily trade than anybody else. If you're a long-term trader, you almost never, but long-term traders don't tend to short the market. It mostly is hedge funds and fast money boys. And I don't know if there's anything you can say about it other than that. Wanted to get and talk about Apple's short position, though, because a lot of times there are stocks that are fairly hated. But most of those stocks don't have any money, and there's probably a good reason why they're hated. It was kind of interesting to see on Monday, it was Monday or Tuesday, that we had almost 27%. Certainly one out of every four shares traded was into a short position on Apple. And I'm not surprised that they got this thing moving. Normally what you want to do is short stocks when they quit going down. I mean, yeah, when they other shorts quit shorting it. And now that we have that ability, or even the longer term, we can actually see. But we've talked about it, I don't know, a couple weeks ago. But I mean, there is an enormous short position on Apple. 47 million shares, and what is it trading at? 220 plus bucks times 46 million. So a lot of people kind of see what I think everybody sees, which is the best is probably over for Apple for a while. But doesn't mean that when you've got the biggest stock manipulator there is in Warren Buffett, that Could he call up a few people and tell them to give us an upgrade? And that upgrade would come and he'd be able to sell them lots of his own shares, or just keep the price of the stock high for years to come. Anytime anybody comes after it, just go after it. We did get new data last night on short positions. You can always go to the Wall Street Journal and check it out. I get it all and take a look at it, but it did go actually slightly down. But of course, all this data is at least, well, this is from September, or no, it's from August 31st. So, or not August, no, what would it be? Oh, excuse me. It would be from September 14th. So you're looking at, well, almost 16 days in the rearview mirror on this data. And that is why I start looking at the daily data to add to it. But yesterday, not so bad. Just 10%, which is, I'm going to say that's pretty average on a day over the long term. But a lot of people, when everybody gets bearish on a stock, man, I don't like it. Even if you're right, you don't get that much money. You need to find stocks that don't have huge short positions, because when it comes down, those shorts have to cover, and that certainly slows down the train wreck if there's going to be one. We had the losers of retail report with pretty much forecastable results, and we'll talk about that today. I'm looking forward to your phone calls at 877-927-6648. And of course, we're going to get started off here with some histoire.
And it's all just a little bit of history repeating.
On this day in 1938, President Franklin Roosevelt writes to German Chancellor Adolf Hitler regarding the threat of war in Europe. The German Chancellor had been threatening to invade the Sudetenland of Czechoslovakia, and in his letter, and into the second in many days, Roosevelt reiterated the need to find a peaceful resolution to the issue. And of course, there were many of these folks. They became known as the appeasers throughout history. Generally, appeasers ended up getting another name, and that was the defeated, because it is rarely, I'm going to have to sneeze. Rarely is the appeaser way ever useful. And I always like the talk softly but carry a big stick. Problem is, when you let these little problems become big problems, you end up with the Second World War and 70 million dead. Since World War II, the policy in the United States has been to fight smaller wars to avoid larger ones. And especially with nuclear weapons, you got to put that fire out almost instantly. There's a great book they wrote in England for similar appeasers. It's called Guilty Men, and I recommend it highly for those people that love history like me. We'll be back in a minute, and we'll get right into charts.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we're going to go right into charts. Give me a call, 877-927-6648. We got a lot of stuff going on here today. We're going to get to it. First thing I wanted to look at was Bed Bath and Below. Certainly the stinker of the day. Do I don't have. Oh, I do. Okay. Bed Bath and Below is solidly below $15. Got down to 14.16. This started to look like maybe there might be some kind of support around this $18 level. I went in the store, didn't see a lot of customers, but of course it's just one store. And you can't tell what's going over a incredible country. Energy off the 2144 level wasn't that bad, but I don't think anything definitively has changed the story in this stock. Now, one of our den members, John, talks a lot about the similar playbook in a stock called Restoration Hardware. And this thing has been kind of interesting. It came off earnings the last time. I still kind of like this thing for one more gap higher because of the super high short interest in it. What is that? Let's see. In Restoration Hardware right now, it's 37%. So more than 1 out of every 3 shares is already short. And that always a problem. What is it in Best Below, Bed Bath and Below? Man, the day before yesterday, 45% of the shares in Bed Bath and Beyond were short positions. So I wouldn't have been short the thing. I would have thought, but it looked like somebody thought that they knew something. We have 22% short in Bed Bath and Below. And on the average daily volume, it had 10 days to cover. So why not all those stocks implode with bad earnings just because there's so many people that need to buy? And 22%, that's bad, but not near as bad as some of the others that we've seen in the past. Normally, the rule of thumb in stocks is that you don't want to short them if there's over a 10% or more than about 3 days to cover. You want a fairly light part of that. And generally, the only thing you can do, because most of the stocks that are weak, and everybody knows it, is to wait for a short squeeze and either participate on that on the way up or try to short after everybody that was short had to get out of the stock. And again, shorts, for the most part, they're not the guys that we see on television that are short Tesla for 2 years already. They aren't probably getting off. They know, they pretty much know what they've got. They're willing to wait for another year, and eventually the stock will just drop 150 points, just like Tilray, and they'll start collecting a huge amount of money. It's kind of hard to be able to short stocks if you've got a big hedge fund, because that's a lot of money, and they're going to go after you. We all remember watching the last couple of years with what was that? It was a vitamin company, Nutra. It wasn't Nutrisystems. I can't remember what it was now, but there was the David Einhorn and one of the other guys. One guy went short, the other one went long, and it was tortured out for a year. It's tough to be short. It's not easy. Okay, what else do we have? I want to, PIR. I don't think this one moved very far, but it was, this one looks like you're trying to find a pulse in it too. Pier 1 Imports came out, no volume today, but it's like $1.50 stock now. You got to figure that this is the last Christmas for those guys. Maybe, can they do a Sears? I don't think so. Sears at least had been around for a while and owned a lot of property, so they were able to bleed that turnip dry for years and years and years. What is that, SHLD? I haven't even looked at this one for forever. Because, again, everybody and their dog is short this thing. Sears Holdings, wow, I hadn't looked at this for a while. New low out here, $1.03 today. Not much juice, but my guess is there's probably 50 cents in this stock when they go bankrupt, probably. I don't know if I was short whether I'd wait around for the last 50 cents or not. But again, everybody knew this thing was going south for a long time. This is another one that Kramer, in the probably, I'm going to say around 2004 to 2008, just absolutely ran this stock on his show for years. He called it a land bank. There's absolutely no way that this thing isn't worth, I think, 3 or 4 times of whatever the price it ever got to. But because they own their locations, and of course, with Amazon coming on, you never, that's just the last few years. But even then, in 2008, malls got hit really hard, and we found out that being a land bank probably wasn't as good a business as you thought it was going to be. That was the beginning of the end for Sears. But of course, it had been pumped up to such astronomical levels because you had a paid shill. Well, I don't know if you call him. Yeah, he's paid to be on the TV to shill for this company for a while until it again fell back to earth. But I don't think anybody ever thought that Sears was that great of a company. Was it a retailer that people had to flock to? Or was it just the fact that you're getting into a company because it owned a bunch of real estate? I never understood that proposition. Yeah, you should be in this thing because they're going to sell the company piece by piece and you'll make a lot of money off of it. Well, eventually you run out of money and that's it. I never understood that argument for it. But, there's a handful of these stocks that do take off like rockets. And especially if you can, Tesla, good example. If you get people that are believers, you tell a giant whopper. Normally, you can't just tell a little lie. You got to go full whopper out there. You got to go, what was it Mark Twain used to put in his books? I think it was both Tom Sawyer and Huckleberry Finn books. They called him a stretcher. I always remember that from reading those books. I enjoyed them as a kid. But it was like lies and there were stretchers, and he would only tell stretchers, a little lies. Well, you got to tell the full Monty lie on a lot of these to keep going. And like Tesla, what are you talking about? You're talking about $15 billion that they need to be anywhere close to their predictions if they're going to build that many cars in a few years. Of course, you know, they had that new semi. Anybody breaking ground for a place to actually build that semi? Anybody seen that? You know, it's easy. Roofing tiles, solar tiles for roof. How many has they sold of those? There's a lot of pie in the sky in this world. But Buffett said it best. Eventually, the tide goes out. You see who's swimming without a bathing. We'll see that when we come back.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we have a question in the den, and that is 3 stocks, Splunk, Data, and Twilio, competing views of your businesses and price patterns. What do I look at these as longs or shorts? If you're unfamiliar with SPLK, this is Splunk. They make a dashboard for executives, and that dashboard, you come in, you hit one button, and the screen pops up, and you see everything inside your company down to the last few seconds, but it's summarized. I didn't really think this company could do that well because, well, frankly, there's only 500 Fortune 500 companies, right? But they've seemed to be able to expand their offering. This did go above the previous high, went back into the trading range. This is about support now. You have to like it when this thing tested 113.73. Doesn't look bad. The problem is that for me, I mean, you needed to go back and buy this thing at 70 bucks. Is the last good buy on this one with decent risk reward. That's November 17th of 2017. So hard for me to say that you should buy this. I'd want a massive retracement into it, but the business is still fairly decent. Data. Tableau software. These guys make a lot of analytics to go into your data. They're not that far from companies like Splunk. So they're kind of in the same area. I like this one that it's at least gone sideways for a while up in this area. But again, I don't see either long or short on it. It needs a longer consolidation. I don't see that much in it. Twilio is probably the one I paid the least to. For what they do, this one would probably be the short in the one that I'm looking at, and would probably want to short this one a little bit more. You've got a big gap down to about 64 bucks. My guess is that any pullback in the broad markets would also have you back at that about $63, $64 level. And of course, getting right up here around 88 bucks, you'd want to be short this thing. And if it went over 90 bucks, that would be your stop. Because if it gets to 90, there's a good chance it's just going to go to 100. So, and it might anyway. But if you want to talk about risk reward, this is the lone one that you would look at as a short, and the lone one that has some decent risk reward just because, hey, you know what it is. This thing gets in the 90s. It's like bears. When they get a taste of human flesh, you just have to put them down. Same thing with stocks. They get to 90 bucks. They're probably going to go to 100, and that's like 80% of the time. So you got to have an overwhelming idea that something horrible is going to happen, or it's going to go to 100. So, risk reward here, pretty good, actually. And the setup for Twilio. I like that big gap down there because it really never was tested. I mean, it came over for a handful of days, and that was it. But also just this business is seems to me rather long in the tooth with all the large competitors that these guys have to go up against. What else do we have? Oh, I want to look at some of the other stocks. Okay, where's my file? Oh, that's because it's somewhere else. There it is. Wanted to look at a few other stocks. AutoNation. Looking at some of these fallen angels, you got to think that used car sales, they make a ton more money on used car sales than they do on new ones. CarMax seems to have been doing a lot better. What is it? KMX? KMX, I think. Is that CarMax? It is. CarMax seemed to be doing better. Of course, I had that huge, wide-ranging engulfing of the entire day yesterday. It's coming back to this level around what is it, about 61, 62 bucks. But I do like AutoNation better as a chart pattern. Especially this light volume pullback from August 1st. But higher interest rates initially are probably going to cause problems with new car sales. But generally, then used cars kind of take off, and generally these places make a great deal more on used cars than they do new cars. So pretty decent support around this 43 level. Nothing here today other than light volume, but those are possible stocks that Wall Street could rotate into in the new time span. Avalara, the one that we've been talking for a while, I'm not going to play it. I just thought it was interesting that it's gotten back into this gap up from the 16th of August. 609 million shares for the gap up. Today we got about 565,000 shares. This steaming to a IPO lockup, I think, what is it, 15th of January. And I'm going to be keeping an eye on it for a while. AVX is yet another stock. Do I have any? No, we do have lots of emails. Better get to them now. Okay. Do you know when TFNN will start broadcasting live? I think we're doing it now, but I think you have to go through YouTube. Somebody, I think, might be looking at the old website. I will forward this to the office, Mike, because I do not know. I don't watch myself. I kind of cringe just looking in the mirror at myself, much less watching myself on TV or YouTube or whatever. I can't take it. Don't want to take it. AVX, what do we have here? Says link to Tiger TV is right there. Okay. Yeah, everybody has to get used to the new website. 725. Gapped up. This is the AVX. Now this one's come back with a kind of a decent little pattern out here. Gapped up with 506,000 shares. Got into it yesterday, 300,000 shares. Fairly light volume of about 80,000 shares now. So let's take a look at this one in the profile. Okay. Manufactures, supplies, and resells various electronic components, interconnect devices, sensing and control devices, and related products worldwide. Electronic components, interconnect, sensing, and control devices. Kyocera electronic devices resale, a bunch of other stuff. Saw devices, sensor products, actuator, acoustical devices, connectors by Kyocera. So kind of an outline of the Japanese firm that makes a lot of components for other, I'm going to say, interesting electronics. But that's actually not a bad looking chart out here. Nice slow pullback. He had a couple of days, some volume, but looks like interesting support at 18. 18. We'll be back in a minute. Oh, and capacity.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks. Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're back up 15 points on the S&P cash. Well, I didn't update this. I'm going to make sure that it's not up 13 points on the S&P 500, up 101 on the Dow. Nasdaq's up 63. Russell's up 3, 2.5. Again, fairly light volume. I've been hearing some theories as to why the light volume, but I don't know if I buy them or not. I have a feeling that a lot of people are just kind of trying to figure out what's going to happen next week. Don't expect a lot this week. But two, earnings, not earnings, but window dressing is an excellent opportunity to drive stock prices up in advance of funds buying. A sucker shouldn't get an even break. That's the wisdom of Wall Street. So it's not uncommon. There's only a couple of cycles that I think are provable in the market. If you know what fast Fourier, or actually even non-fast Fourier transforms are, Fourier transform, and the inverse Fourier transform, you can find out cycles in just about any signal. And the good ones out there are two. The ones out there, the week into options expiration and the ones at the end of the month seem to show up over and over and over again. At least you can prove it mathematically. And probably the best, it's not a whole lot, but generally the best indicators in the market are, there's nothing approaching, 100%. If you find something that works 75% of the time, that should be great. Most of the things that people talk about or did when I was starting, slightly better than a flip of coin, 53%. I mean, they're just very edges, and you really needed to get enough of those together to get about 57% of the time to start making money after trading costs and opportunity costs and other things like that. So you really need a fairly large edge on the market to make money, but interesting nonetheless. Okay, let's go back here and see if there's anything else I wanted to look at. Question about energy, XLE. I had a great conversation today with Basil, and he talked about the XLE a little bit. For an ETF, this thing really doesn't move that much, and I hadn't thought about it in a long time. But if you got this thing right, you made $4. My question to him when we were talking about a variety of issues was whether or not this is an abandoned baby at 77.01 in the XLE. You've got 2 days out here slightly lower. Would you like to have seen this thing maybe a little higher to look a little bit more textbook? It certainly doesn't look great. But you've got a couple of these in the past where this thing did the exact same thing. You had a nice little pop out here at $78 back on the 10th. And it went sideways for 3 days and then started rolling back over and down to that 71.70 low. So this thing likes, or at least two, which these things are kind of as rare as henties. You do have these at $78. So kind of interesting day out here. Let's see what else we have. BBT in the finance space looks like it's breaking through some previous lows. We got to 49.02. That had 49.76 back on April 2nd. This is the bank with 5 million shares. Got into that with even more volume, 6.9 million shares on July 20th. Bounced, came back down. Volume just kind of trickled down a little bit less. But so far today, 1.9 million shares. You would certainly need it close probably back up around $50 to guarantee or to invalidate this break lower. But I'm thinking that's going to be one that I'm watching into the close today. Cott Corporation, this one was kind of a interesting play in that it was bouncing around this $15 level. That's looked like support from August 2nd. Yesterday you had 4.8 million shares against that 2.56 million shares. Nice rocket out here today comparatively on this stock. It's been going sideways for a while. 16.05 on it. Designer Shoe Warehouse. We talked about this one a little bit yesterday and whether or not this thing is going to be able to break higher. You had 15 million shares on August 28th. We're into that with less than 1 million shares so far today. And that doesn't look like that's going to pick back up. You've got a gap down to about 27.40 on that. One of the new IPOs that I talked about earlier in the year is starting to gain some attention for me, and that's Enlight. This company makes lasers that you put on sharks. I'm just kidding about that. See, NASDAQ IPO lock 8 LASR. Oh, it says last. LASR. There we go. So we'll see what date the lockup in this one is over, and we'll come back and take a look at it. Come on. Lockup expiration is the 23rd of October. So we're only, less than a month away from that one. These miserable ads keep trying to load in this page, and I can't get to the stuff I want to look at. Okay. 180 days, so we know we're almost, we're probably about 160 days. To see what else we have out here. Okay. Doesn't seem to be a lot else out here. 6 million shares offered. Shares offered. Shares outstanding, 33 million shares. So there's not that many shares out compared to the ones sitting on the shelf, which you always have to worry about. I did like this at the IPO because these guys made very high output lasers, not the cheap ones using a lot of other things, but these are the ones, super high powered ones that can, I think someone said that they could go over 1,500 miles without a repeater. I'm going to have to go back and look at that. But these are super high-powered fiber lasers. And eventually, I think these things are going to take off. That may have a little hiccup or two here over the next 6 months, but I continue to keep an eye on Enlight Laser, LASR. Wait for that lockup to be over, by the way. Go diving head first into a pool. Don't know how deep it is. it is. We'll be back in a minute.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Of course, the train wreck that was Tilray and other weed stocks last week in the descent into reefer madness covered up one thing, and that is that with all the people out there saying that they've got a great company, there's one company that's got a license to actually sell it as a drug, and that is GW Pharmaceuticals. They may actually be breaking out here today. Volume's a little bit better. But a little bit of follow-up to the big move last week. It's not Tilray. It's not $300 one day and $128 today. But certainly, if you're looking at these, I think this is the all-time high out here today. You needed 345,000 shares to break through the previous high. You got 2 million. So why everybody's looking at all the other, I'm going to say gambler stocks in weed. There's one that's probably not so much a gamble. It actually has a license to sell this stuff. It's not a lot of smoke and mirrors. It's not a company worth $30 billion in market cap with 2 million in sales. Actually, a real company. But it doesn't get the love that the other stocks have. I always wonder why. Yeah, you never know. Google came before the people of the Congress yesterday and did everything it could to not answer any of the questions about what they're doing in China, and wouldn't deny that they're going back in China with a very censored version in partnership with the Communist China government. Doesn't seem to have bothered it too much, fairly light volume, but my guess is that eventually this will all come out and cost them some cash. I look at this very much like Facebook. They may be able to dodge this for a while, but eventually there'll be the right article out and they'll start have to do some splaining, Lucy. In the meantime, sell when you can, not when you have to. And we will see you here tomorrow. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.